and get started today. Today I have our board of directors, Sam Ebenkamp. Sam, if you want to jump on and just tell us a little bit about yourself and your history with USCA.
Good morning, everybody. Maggie, it's the first time I've seen you in person, so good to see you.
Good to see you too.
I'm gonna pull my Ranger up here out of this soft spot and shut it off so you can hear me a little clearer. My name's Sam Ebenkamp. I'm a first generation black and red Angus breeder and farmer feeder here in southwestern Indiana. I'm first generation. My kids will actually be seventh or eighth. My story's pretty unconventional. Partnered with a neighbor that didn't have a successor. He has two daughters that aren't involved in the farm. Moved up to Indianapolis after they got out of college. And my in-laws didn't have a place for me on their then hog farm when I got out of college. And then my now business partner said, well, how about you come work for us for a year or two, and if that works smooth, he said, we'll make you a partner and I'll phase into retirement and you can, phase into taking over and we'll start on shares and go from there. I said, my only hard stop is I'm not going to sign up to be a full-time hired hand for the rest of my career. He said, nope, that's not what I want anyway. So we've been doing this now. This is the 8th year. We've been doing this and it's been very good for me, my wife, my two kids. So not having had a background in the cattle industry before that, I'd been in pigs with my in-laws since 2011. And I knew that a lot of the faces in the industry organizations at that time were frequently older. And when COVID broke and everything got really complicated, and I had been on our county farm bureau board until the fall before. I quit due to a relative had some health issues and then passed away, and I needed to be somewhere else. I was talking to Casey Schumacher and was reading some of Leah Biondo's posts on Twitter and Jess Peterson's. I reached out to Leah in Washington, D.C. at the time, and I said, how do I get involved in U.S. Cattlemen's? She said, well, here's how you get involved. And I always joke that there's few more American cattle producer ways of getting involved in an organization, but I joined while spreading manure in this field up here on a cold, kind of chilly spring day while the cattle market was falling apart. And I ended up on the board that next year as a director from our region because there was a vacancy at the time. So I just kind of looked and said, there's an organization that's trying to do good things for good people, and I'd like to be a part of that, and I'm thankful that there is. So that's a little bit of my spiel. Been a lot of learning every day, but I'm always a firm believer that anytime you think that you're the smartest person in the room, you're in the wrong room or you're not looking around. So that's what I know. And on behalf of myself and the board, I want to welcome everybody to this morning's call and thank you for being here. And I look forward to seeing what everybody can tell us this morning. Glad to have our speakers and guests, and thank you, Maggie, for helping put everything together.
Well, thank you, Sam. And it does look like we do have a few of other board members on. President Tupper did join us today. Robert Groom, it's Whitney. I see as well out there. Thank you guys for jumping on, and hope you guys enjoy today's program. So we'll go get started here. Our next presenter is Dallas Mount. He's with Ranching for Profit, and I'll let him kick it off and give a little background on him and what Ranching for Profit does.
Sure. Yeah. Thanks, Maggie. Is my screen coming through all right?
There it is now. Yep.
All right. Cool. So, real briefly, Ranching for Profit, we are a business management school for people in agriculture. So we teach how to look inside the farm or ranch, figure out what's going on and how to make it better. So I want to be really brief this morning here with you guys, but share some things that we focus on and tend to do, and just kind of maybe give fodder for the discussion that will hopefully follow this. So um, here's an example ranch. This would be maybe it's I live in Wyoming. This would be typical of a Mountain West ranch. Runs about 300 cows, puts up some hay, keeps some heifer calves back. So at the end of the year, they're sitting down to after having met with their accountant, got everything in, they're looking at the year-end summary. So accountant calls them in and says, "Hey, I've got your numbers put together. Come take a look at it." Here's the brief of it: is that we've had about a $500,000 of livestock sales, a little bit of other income. So total income to the business was 546. When we look at your expense side of the business, that comes out to, we add everything together, what you guys are doing, feed, vet, keeping the machines running, doing a little bit of field work, livestock purchases, that's primarily bulls. A little bit of wages in there that there's two family members working full time in the business. So a little bit of wages that they pulled out to keep the lights on at the house. And other than that, just, some basic repairs and maintenance on the place. And lo and behold, we spent $521,000. So at the end of the year, when we lay those two next to each other, accountant says, good news, you don't owe hardly anything on income tax. So you can go down the road and continue on. And so that is the typical way that a farm and ranch often manages things, is not really being proactive, much more being reactive, looking at their economics and their finances at the end of the year. As long as they can continue to do next year what they did last year, generally things are pretty happy. And we all know where we are in the cattle price cycle, and if that were to change, that net positive number would become a large net negative number in a big hurry. So I think this needs to change the way we look at these numbers. If we looked at this and said, all right, I want you guys to fix this ranch, we'd really be throwing darts at it, right? It's not very clear at all what we're looking at doing here. So what we do at Ranching for Profit, probably the thing we're best known for is the way we put the numbers together and help farms and ranches really put their hands around what's going on in their business. We need to lay the business out in some kind of a framework. I'm not going to go through this in detail, but essentially laying things out into divisions and then enterprises and putting those costs in the correct bucket that give us useful information. We use some terms around gross margin analysis. Gross margin looks at the economic efficiency of the different enterprises in the business. We look at overheads based on divisional overheads and business overheads. We don't just throw them all into one bucket and call them, entire overheads to the place. And also, we don't break them down into a million different little pieces, which is what a lot of analysis do, which doesn't give you very useful information. So this is the way we lay out a farm and ranch economics. If we did this for this example ranch, this is what those numbers would look like. So we'd break their cows and their hay apart. By doing this, we can see that their cattle division has a pretty decent gross margin, although gross margin per head is not as strong as we would expect it to be in this market. Their divisional overheads, so it leaves them with a divisional profit of 180,000 from that division. Their haymaking division for this ranch doesn't really produce much value, right? $10,000 on $1 million income business or $500,000 income business is really not significant. So they've got a lot of moving parts in making hay there that for this farmer ranch is not really moving the needle. So that's useful to know. Their business overheads, just the cost of keeping the lights on in the business, is 350,000. Many businesses are surprised what that number is when they actually put it together. So that leaves them with an economic loss, different from a cash loss, an economic loss of $110,000. So that gives us a bit clearer perspective when we lay that next to a balance sheet. So here is this ranch's economics, or their profit and loss, laid next to their balance sheet. Now we can really start getting some useful information in there. What we do is we take those numbers, we look at some key ratios out of those. Not going to have time today, obviously, to go into how we calculate those ratios or what they mean, but we've got our targets laid out there for where we'd like those ratios to be. And as we look at this ranch, We can see return on assets in their operating business, they're running at -2. We think you should be running north of 10% return on assets in your operating company. Gross margin ratio, they're doing okay on their gross margins, right? Their cows are working okay, not great. But they've got some gross margin to work with there. They're way too high on their overheads, right? We think they should be less than 40. They're running at 60. This is a number that means gross product per full-time employee relative to the number of employees you have on the farm or ranch. How much gross product, or the equivalent would be gross revenue, is the business producing? Some key balance sheet ratios. These are things that you might be familiar with if talking with your banker. Days of working capital. That's a really key one in a farm or ranch. It really means how much runway do you have? How much maneuverability do you have in decision making on your business? As that number gets too low, this ranch is down to 33 days of working capital. Our target is greater than 120. As that number gets too low, a business really struggles to find and use those opportunities. So there's some things we can do to help pump that up. And then this is another key one. DCR stands for debt coverage ratio. How able are they to service their debts? We could have a business that's profitable that has a poor debt coverage ratio. We could have a business that's unprofitable that has a strong debt coverage ratio, right? So it's kind of disconnected from profitability in some ways. So anyway, I just wanted to give you guys that quick snapshot. I know that came fast, but that's kind of our main thing. We mostly work through a 6-day business management school that we do. Right now, we're in the scheduling time of those for our upcoming winter season. So these are some that are on the calendar. We've got a few more since I built this slide, and we do a young adult ranching program as well in Wyoming here that comes up next week. But we've got some in Reno, Phoenix, and Abilene on the schedule. So anyway, I hope that wasn't too fast, but I thought that might get the conversation rolling and let us have some good discussion as we go here. So if I can figure out.
Back on. A little delayed there. Any questions out there? I guess one question, Dallas, is what's the best way to sign up for those classes if anyone's interested in taking them and or even learning more about ranching for profit and all that?
Sure. Yeah, we've got a website, ranchingforprofit.com, ranchmanagement.com. And that'll list our full class list and different places we are. We get invited to come to local communities quite often. So if you're connected with a local cattlemen's association or something like that and would like to invite us in, we come and do a short format, either a 1 or a 2-day ranching for profit workshop as well. So that's what we might have one coming up near you guys. We do about 14 of our 6-day schools each year. We put an average of about 500 people a year through our Ranching for Profit schools. And then we have a follow-up program to that. We call it Executive Link, where we put businesses on boards of advisors for each other, and they meet several times a year and do strategic analysis inside of each other's businesses. So that's kind of our next tier program.
Perfect. And I was looking at the website and everything here before today's call, and just because I wasn't too familiar with what Dallas and your guys' team has done, and I recognized a few of your team members through people that I've met over not just USDA but other associations that I've been involved with, and it looks like a pretty good and great team there. So if you guys are interested, I can email me and I can get you guys contact with Dallas and some other team members, and I know it's kind of tough to look at your accounts and everything to go into when you're trying to ask a banker for money for loans for cattle, land, anything, especially as young ranchers. And so I think this is a great opportunity for anybody and everybody to kind of take a deep dive and look at what is actually being profitable and what isn't. So yeah, thank you. Any other questions? Oh, we got a quiet bunch this morning.
So some things to think about, Maggie. On one of the common questions we get is what what are the more profitable businesses doing from the less profitable businesses, right? Everybody kind of wants, what's that silver bullet? Is there a combination of cows and yearlings that's the right thing, right? Is there a type of cow? Is there a system or in a process? And the answer is no. We don't have any of those silver bullets. We work with a lot of clients from all different parts of the country, and even Canada, on that in the mix of businesses that show good profitability numbers is all over the place, right? So we've got some very traditional cow calf operations that are, the more established ones that are really putting down amazing numbers in terms of profitability. We have a lot of those that are putting down very disappointing numbers in profitability. Obviously, the last year or so has been an exception, but if you look at long run profitability, many of those are economically losers, but there are some that are doing really well. And then same thing on the yearling numbers, right? And then direct marketers, right? People often say, well, if you're going to make money in this business, you got to sell beef direct to consumers, and I don't agree with that at all. We see some people that are doing the direct marketing stuff that are their businesses aren't working at all as well, and then vice versa, right? Some that are really really doing well. So the thing that really determines the long run profitability in these businesses that we see is the intensity and the intention with the management that goes into it. So for those people that learn to look inside of their business, learn to understand, right? I was just showing a P&L form and a balance sheet form and some key ratios. Learn to understand what those things are telling us, how to strengthen those areas that were weak, how to really focus in those areas that were strong, and then looking at the leverage, the pieces that they control inside that business. That's really what we see distinguishes those businesses that tend to consistently put down good numbers year over year, is really that intentionality. And I think that's pretty exciting, because you hear a lot in the in the media stuff that, oh, the only thing that affects profitability is weather and markets, and that's just not true, right? High markets are not necessarily good news. I mean, high markets can be bad news for some people depending on which side you're sitting on. Weather variability is just part of ranching. When weather variability happens, it creates opportunities. So, for those people that are willing to seize on those things. So just some thoughts for the group this morning.
Yeah, so and in your presentation, you talked about, selling hay, and then you just mentioned, direct consumer. Are those other additional incomes, like are you guys seeing that more in today's kind of generation, or nowadays, I guess, of people adding that on into their business plan as ranching, just kind of trying to
Yeah.
find that little extra income and everything?
Yeah, yeah. So your question is, are we seeing that more? And especially with the next generation ranchers, absolutely, yes, we're seeing it more. I'm not sure it's a good thing. Here's why. I realize this is maybe a little bit counter to what a lot of the messaging is out there. Diversity at its core is not an income maximization strategy. Diversification is a risk management strategy, right? It's saying, well, if this doesn't work, maybe this will. If this doesn't work, maybe this will. Um, you really need to be careful with over diversity. We see a lot of businesses that think, well, if I'm raising cows, I probably should be keeping my calves and raising them to yearlings. If I'm raising them to yearlings, I probably should be finishing them. If I'm finishing them, I probably should be selling them. When I go and sell my beef to my customers, they say, well, do you have any lamb? So now I need to have a flock of sheep. And then they want some chicken. Oh my gosh, God forbid they want chicken, right? So now you can kind of follow the road down. If we have a business like that example ranch I just showed, it had cows and hay, right? Imagine a business that had 15 columns: cows, yearlings, grass finishers, direct beef sales, ewe lambs, growing lambs, direct lamb sales, chickens, gardens, Airbnbs, right? The list could go on and on and on. And now what about the person managing that business? They're completely scattered, right? They have very little focus. There's lots of little things going on, but there's very few things that are going on that are really actually moving the needle. What we when you're young and you're starting out, it's great to try stuff. as a business matures, what you tend to do is you find those things that you're good at and that are actually that you're good at creating value on, and you tend to focus. So the businesses that we work with that tend to be the most profitable businesses are those that do two or three things well and at scale, right? So if you're going to do something, let's make sure it actually is going to be something that makes a difference at the end of the year, right? Selling a couple $1,000s worth of direct sales is probably just a distraction. Selling, $500,000 of direct sales, now we're talking, right? So we need to make a base level scale for those things.
All right. Any other comments? Looks like our sale barn recap, Buffalo Livestock, Taylor Snook, isn't quite on yet. So we can open up the conversation. If he does jump on, I know, let's see, Cody Tupper also on. Michael is also on. When he first jumped on, he said he's on his way to the Northern sale. And I know Justin was just at a Superior sale. If while we're waiting, do you guys want to kind of jump on and see what Justin, the market, brought over in Iowa and for Superior, and then Michael kind of maybe give us a little clips and a glimpse of what you guys are expecting here at the Northern.
Sure, I think, can you hear me?
We can, yes.
All right. I think historic markets, we're definitely seeing these yearling prices just hard to imagine it getting any higher. But we also see some of the highest, as your previous speaker talked, some of the highest costs, input costs that we've ever seen. It's a different kind of math. You look at cost of gains of $1 and it costs $4 to buy it. So it's math that we haven't seen, but really good kind of markets, and really look forward to see what fall brings.
Thank you, Justin. Michael, are you in a spot where you could kind of give an insight of what you're hoping the Northern sale will bring this weekend?
Yeah, here we go. Hey, Maggie. Yeah, no, I think it's like I said, like Justin kind of said, it's an exciting time for ranchers. We're dealing with some great prices here, but on the farmer feeder side of it, it's becoming a little scarier, a little tougher to operate, and I hope this all works out for everybody involved. But we're dang sure at a time now where the ranchers deserve to be paid, and we're kind of turning the tables a little bit, where so that we're transitioning to different sectors making the money, and while that's needed, I just hope everybody stays protected in the meantime. But yeah, very exciting time to be in, and I'm sure we'll break all kinds of records this summer.
Perfect. Well, thank you, guys. Well, maybe Taylor Snook will be able to join us. Taylor Snook, just a little kind of background on him. He started, and Cody may know this a little better. It's been about 4 or 5 years, I want to say, since he's been with Buffalo Livestock Marketing in Wyoming. Also a young, I guess, sale barn owner. He's around our age, Michael, Cody, and I's age. Doing a great job of taking that over. He runs that with his brother Austin and a few other investors. They're based out of Hewlett, Wyoming, so we grew up with them while living in St. Ange, and it's really nice to kind of see that younger generation take on these sale barns. I know it's a big expense, a big headache, maybe sometimes, but definitely like to see those sale barns staying open, as we do kind of see more and more sale barns going out of business, just for the fact, I mean, same as ranching. Sale barns take a lot to keep up, and having that crew and everything really does make a difference. So Well, I just kind of want to open up the floor here now. It has been our third call so far. Some of us have joined us here on a few, but just want to make sure that we are hitting what you guys are expecting and looking to seeing what other topics you guys might be interested in joining in on. So the floor is open and anyone can talk at this point in time.
Dallas, I do have a question for you.
Yeah, go ahead, Cody.
So, as far as ranching for profit goes, do you guys get into the factor of cost of marketing? I mean, on years like this and last year, when you're doing it on a percent basis, it's really high. So, do those factors play into a 5-year plan on selling cattle, or do you just, I mean, how do you go about that?
Yeah, good question, Cody. It's probably more of an open discussion among the class is how it's discussed most often. So as you know, there are pros and cons of the different marketing strategies, whether it's selling private, selling on the video, selling them live, right? Or it through a barn. And so we often have a pretty robust discussion in the class about oftentimes our classes are 40 to 50 people and generally there's a lot of decades of ranching experience in there. So we kind of throw it out and let folks kind of dig into that and you'll have some seasoned ranchers that say, we used to sell this way and now we sell this way and we feel like we're capturing more of that value than we used to, or people that present alternative views on that. So I think it is a pretty interesting discussion and there's strong feelings on all sides of it. And like the previous gentleman just mentioned too, the whole price protection and risk protection piece of it is another thing that most ranchers are generally kind of a little bit embarrassed that they don't understand how a lot of those tools work and what they are. So that's another one that we kind of throw out and have an open discussion on about. All right, who's using this? What kind of tools are you using? What do you find works well? And really just let people share their experiences and capture those and try to draw some conclusions from that.
Awesome. Yeah, thank you. I guess I was just curious on how extensive those conversations got in them classes, and I think you answered those questions for me. So thank you.
You're welcome. Yep. Thanks for being on.
Thanks, Cody, for joining in. Anything else from anybody on today's call? We have talked in our past calls. We have talked LRP and if that's a conversation we maybe need to go deeper in. We hit a little bit on maybe some drought prevention and drought readiness on last month's call. If any of those conversations need to go longer, let us know. We definitely have plenty of speakers we can get into and we can have more concrete kind of focused calls and all that. Did also want to note we will be having our summer board meeting and cattle producers forum here in Billings in July 22nd and 23rd, with the board portions taking place on the 22nd and the cattle producers forum taken on the 23rd. We're very interested in seeing you guys in attendance. We are looking at virtual options as well for any of those that maybe can't make it in person, but still want to be a part of those conversations and topics too. So be on the watch and everything out for that. Jess, I see you popping up on the screen here. Let you kind of jump in, but that registration page is going to be open here, I believe, today. But definitely all the hotel information is available and everything on our social medias and stuff. So if you're interested, reach out to one of us and we can definitely get you contacted and get you in the right steps for that. Jess.
Yeah, everything that Maggie said, we hope to see, you'll see some more information there. Look, I'd be remiss if I didn't go a bonus round with Dallas Mount. I've listened to all of his podcasts and updates, so I'm not going to let Dallas Mount. I'm always sitting in the back. He's asking the hard questions, stumping me in my operation. So I'm going to get the bonus round with Dallas Mount and try to stump him in his situation. You know, I did this from as we went as look, I say recovering cow calf. That probably isn't a great connotation. I'm cow calf. We just didn't quite have the land. We had an opportunity to lease more land and do it with the practices that the landowner wanted. And it was always my goal to have some program cattle, yearling stocker operation. So we're doing replacement heifers, feeder steers, feeder heifers. And so we're going in that model as we've already heard on this call. My model was saying, well, you know, I buy these steers at $1,200, $1,300 and I have a little margin in them and I work my margins and they're pretty tight. And now that's not happening. So I think to Dallas, the question is, I think for all of us, again, this is the bonus round question. So there's no right answer. I think the question we're all wondering is, when it does drop, is there a prediction? I know no one wants to get on a crystal ball here. Is it that $500, $800? And then what is that per head? Because we know there's going to be some readjustment. From your perspective, if we just had something drop, and you know it is, what is, again, bonus round questions, what are the three things you're going to say, okay, you've had it here, now it's here. What are the three things that you're going to tell these folks? I know the first one's going to be, I hope you all saved, and every rancher is going to look at you and say, what did you say as they drive up in their new pickup? So what are the three things you're going to tell folks? I think we all walk away here today, because what I'm going to be doing is I'm going to remember that June morning where I said, you know, Dallas Mount said it would be okay when the market readjusted. So bonus round with Dallas Mount. Take it from there. No pressure at all as the thousands of listeners on the podcast take this in the days and weeks ahead, and they come back to it when this market realigns.
Yeah. Good. So just so I'm clear, Jess, what you're asking are what are the strategies for preparing for the downside? Is that what you're saying?
Exactly. I mean, right now, and we heard it earlier. I mean, yeah, look, the ranchers, it should, and from US Cattle, it should be like this every year moving forward, but we have to be realistic. So that market softened. I hope I think we're all at that point where it'd be a nice little we never seem to have soft landings in the cattle business ever, right? It's just a big thud. So yeah, what do you do? What do you look to? What are some things that you're going to say, okay, folks, it's okay, it's all right? I mean, I think when we first had this high round of calves, folks like, you know, it'll never last. I've seen it won't ever last. Now it's doing a little bit. So now you start looking at your business plan. Justin Tupper mentioned, I mean, input costs are high. I mean, hopefully it never seems to happen like that. Your input costs drop a touch or something, some situation there. But I think now everyone's like, okay, well, I guess we could pencil this number in. And you know, your banker always says, no, you pencil in $200 less on your or whatever that number is. What is it that you do now to say, okay, now it's recalibrated? What do you do now? What are some strategies?
Yeah, great. Okay. I think you've equipped me here. Give me some time to think about it too. So I find myself, and maybe my gray hair now is starting to show too. You know, I'm running around with more of the gray hairs in the room. And they're, many of us are sitting around going, oh, you're right. These young kids, they think it's always going to be this easy, right? And just wait, because it's a coming. And but I think there is some naive optimism that has been brewing over the last few years about this, right? So people that have been in the ranching business for the last 5 years might think ranching's pretty dang easy, right? You know, because it's been a pretty steady ride. And we're all getting more and more sure that the bottom's going to come out of this thing in the next. No, everybody's critical, right? Get your pen out. I'm getting ready to give you the date. No, just kidding. Right. Everybody's pretty sure that we're getting ready to have the bottom come out of this thing. And I would say probably pretty sure in the next 2 years. It might happen in the next few months. It probably the next year is probably a good chance, but I think the next 2 years, somewhere in that window, we're going to see the bottom come out of this thing. So what does a person need to do? I think putting yourself in a strong cash position, a strong working capital position, it is probably the number one thing. It maybe fighting for number one, and number two is really manage those reoccurring overhead costs extremely well. What tends to happen? I've been around through a few of these cycles, nothing quite like what we're seeing now. What tends to happen when we have high prices is people tend to acquire and let their businesses develop overheads that cannot be supported through the downturn, right? There's some of you guys probably know Dr. David Cole from Virginia. He's got a really interesting set of data that follows the corn price when corn went from $2 to $7 during the last price cycle. Farm family living expenses went from like average farm family living draw went from like $70,000 to support a farm family to $250,000 to support a farm family when corn went from $2 to $7. So it's easy to let family living and family living expenses, and along with that, ranch overheads. So when I'm saying that, I'm thinking of a bunch of machines that would be nice to have, but probably our business doesn't support them from the scale that we're running. So really be very diligent on those overhead expenses, those reoccurring overhead expenses that don't create revenue, right? There are some overhead expenses like fencing and water development and things like that that could be great at creating revenue, right? But a tracked skid steer for a ranch probably doesn't create revenue. It probably makes life easier, right? So be really careful about those overhead expenses that you build up in these good years that you're going to try to support in those years that you move forward when the bomb comes out of this thing. I think there's going to be huge opportunities for those people that are well positioned when the bottom falls out, right? So a lot of our more aggressively managed farms and ranches are really kind of almost looking forward to it in some ways, right? Because now obviously you never want to see your neighbors go through pain, but when the bottom falls out, probably not the first few months that it falls out, but within the first couple years after it falls out, there's going to be ranch lease opportunities available. There's going to be cattle that go on sale in a big way, right? And this enormous cost of capital that we're seeing to operate right now is that ball's going to flip. So some people are going to leave pretty hurt in this thing. So if you can position yourself, strong cash position, strong working capital position, a reasonably sized overhead business, and be ready to seize on opportunities and try to not let the emotions of the market moves blind your decision making, I think that would be a good thing. So I don't know. What do you think? Bonus round, was it worth it?
You heard it here, folks. You heard it here. So go back to this, Maggie. We'll repurpose this here. Hopefully in 10 years. I don't want to go in 6 months. Hopefully in 10 years, no, thank you. Any comments from anybody on that? Because I kind of open that up. So I want to do the Maggie thing, open it up for anyone else. Dallas, I think that's very, very helpful. I think you touch upon a really good piece here too. And something that really struck me is, again, that capital or access to capital. What we're and we were touching on this earlier. I think Michael Cruz was too. I mean, what it is when we're buying these, these stockers, these wean calves, what your operating capital is increased tremendously, right? And of course, that interest to carry it is went along right along with it too. But so I think there is a little bit of optimism that, banks probably, hopefully they don't get caught as they extended some guys and gals pretty aggressively, because you had to, these are twice as much dollars in these cattle. So no, I think that's very helpful. I'm going to refer back to that. I'm going to go right back. So Maggie, make sure we highlight what part of the show this is in here as we look at quarter to the hour. Any others? I'll turn over to others, but thank you, Dallas, for going to the bonus round. I'll turn over to anybody others for questions.
Oh, well, quiet here. Again, Dallas, thank you so much for jumping on and giving us, a kind of insight into that financial pieces and things. And ranching has always been that kind of, we'll look at the books when we need to look at the books, I feel like, aspects most of the time. So I think making sure that, yeah, people are actively on it and just learning where they can to kind of go right. I know back where I grew up in St. Ange, that land has always been a ranching with cattle and sheep. So that there's always been that there's diversification there. I know growing up also where my family originally is kind of based out of Kimball, we did a lot of haying back then too. So there's always opportunities and everything to look at what is actually making your guys' places profitable and everything. And so yeah, we'll link up with the website, your guys' Ranching for Profit. If you guys have any questions on any when those classes and everything are, reach out and we'll connect you guys with Dallas and his team. And we're excited to kind of just see where this process and steps go. And we will hopefully get to see you guys in Billings, if not in person, but virtually. And I guess we'll let you guys get off and get to your day a little sooner today. But thanks everyone for jumping on. Really do appreciate it. And we want to hear your feedback. So let us know what we can be and doing better and what topics you guys are looking forward to maybe getting deeper dive on and or something that we're missing completely. So thank you everyone and have a great Thursday and Friday, and hopefully the weather doesn't get too hot and there's some rain with not too much hail damage in your guys' future as well.
Thanks, everybody.